Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. Happy Valentine's Day. This week has mostly seen the market take a breather within an imperfect, possible, bright green mid-January to date bull channel, currently at 588 to 615, with yesterday and today being the resurgence of the move higher that has been here since the start of the year. The market is now eyeing the 50% Fibonacci line overhead of the May to August 2024 move at 630, and possibly the 50% Fibonacci of the March to August 2024 move at 658. In the overall picture, there are two, possibly three major features that have developed, or should I say are developing in this market. The first and by far the largest is the late May 2024 to date possible very large double bottom pattern. We are at this time constructing the second leg up in this pattern. And key to the breakout upwards, I suspect, will be at or around the 50% Fibonacci line of the May to August 2024 move at 630, though it could be as high as the next 50% Fibonacci line of the March to August 2024 move at 658. Now, I'm sorry for being a bit vague here, but this really is a very large pattern. The second pattern is more recent, though still quite big. It is the early October to date rounded bottom pattern. Here I would also look at to the 50% Fibonacci line at 630 as the final point of the construction and the start of the breakout. However, there is an argument for looking at the congestion in late October last year in the 583 to 592 area, just around where the gold long moving average is situated, currently at 588, as being the breakout point, though I am more cautious and I would still favour the higher 630 area. However, just keep a wary eye open for the 588 area just in case. Finally, well, I have both the dark blue bullish Andrews pitchfork and also the bright red bullish shift pitchfork here for both of the same late August 2024 to early January 2025 move, both of them on the same daily chart. I am usually loath to put both of them on at the same time, but for now, both still fit, with the market being in between the dark blue middle time above, currently at 654, and the dark blue lower time below, currently 564. And also right now, pushing up over the bright red middle time, currently at 598. Both these in their own way are supporting this move higher. So what have we in the way above that might change this seemingly significant attempt upwards? Well, not a lot. Personally, I think you would likely have to utilize the two 50% Fibonacci lines above at 630 and at 658 to try and do that, but topside continues to seem vulnerable right now. Chicago corn, and happy Valentine's Day. The green short medium moving average below, currently at 472, had between September-December 2024 shown a significant support to this market, halting a decline and starting a rally that is still evident today. 14 weeks ago I asked the following question, I quote, "The key question be whether prices can attain the early October highs between 450 to 455, or will the erosion of the bullish incentive by, for example, the long moving average or the November 2020 higher 439, and whether this will be enough to prevent prices from trading higher," end of quote. Well, the 450 to 455 area topside did cap prices, but by late December last year, the market had, with the aid of the late September to late December 2024 sideways triangle and the new dark blue early December based uptrend, currently at 497, pushed up higher through the highs of May 2024 at 480 and 484 and up to the congestion band 491 to 498. This started to erode the bullish incentive, but prices still continued pushing higher, testing the next band of congestion between 505 to 506, quite a narrow one, made up from the 50% Fibonacci line of the June to August 2024 move at 505, where we saw further hesitation until today, when we have seen it as actually a base of support. We still might see further hesitation, as though the top side seemingly has limited resistances. The ones that it does have, and there are two significant ones, they are likely to cause some second thoughts. You see, not far overhead we have the combination of the October 2021 low and the 50% Fibonacci line of the June 2013 to February 2024 move, both at 516. Then, a little higher still, we have another significant congestion combination, the 2014 high and the 61.8% absolute Fibonacci line, again, both at 525 this time. These will be the levels to watch out for. This follows on from last week's wannabe weekly key reversal up that ended up as a lesser outside week. These all detail the topside resistances and opportunities, so let's look at the downside now. And the most obvious and significant feature is that early December 24 to date dark blue uptrend, currently at 497. This is a multi-pointer uptrend and has been justified most recently 2 Mondays ago and arguably this past Wednesday. If this breaks, and so far it still looks good, but if this breaks, then we may see a significant move lower, right down, possibly as far as an initial move down to the 460 to 465 zone. So please be wary of that and aware of this opportunity on the downside should it happen. Kansas City wheat. This week has mostly seen the market take a breather within a possible late January to date bull channel, currently at 601 to 643, with yesterday and today being the resurgence of the move higher that has been here since just after the start of the year. The move up here is not as consolidated as in Chicago wheat, but it does bear similarities. The market has now moved up over the interesting 38.2% Fibonacci line, the big old 2011 to 2019 move at 618, and is eyeing the October 2024 highs at 638 and 635, as well as the January 2015 high at 646. That effectively capped the market back then when we were looking at it in October 2024. In the overall picture, much like Chicago wheat, this market here had been the story of 2, possibly 3 major features that have developed, or should I say are developing, in this market. The first and by far the largest is the late May 2024 to date possible very large double bottom pattern. We are at this time constructing the second up leg in this pattern, and the key to the breakout upwards I suspect will be around the January 2015 high at 646. This really is a very large pattern. The second pattern is more recent, though still quite big. It is the October 2024 to date rounded bottom pattern. Here I would also look to the January 2015 high at 646 as the final point of construction and the start of the breakout. However, there is an argument for looking at the congestion in late October to early November last year, based around where the flatlining gold long moving average is situated, and that's currently at 595 as being the breakout point, though I am a little bit more cautious and would still favour the higher 646 area. However, just keep a wary eye out for the 596 area, just in case. Finally, unlike Chicago wheat, we only have seen the one bullish pitchfork here, a dark blue bullish shift pitchfork for the late August to early December 2024 move to look at. The market has stabilized over the dark blue middle time, currently at 595, and is now utilizing it as a base for a move higher towards the upper time, currently at 650, just over the January 2015 high. I've also finessed a recent uptrend into what now looks like a possible bull channel, 601 to 643, originating from late January. Keep an eye on that as well. So what have we in the way above that might change this seemingly significant attempt higher? Well, to be honest, not a lot. Overall, the top side does seem vulnerable right now. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.